Good evening, this is Nick Inman from VolumeProfileTrader.com on Wednesday, January 25th, and what I'm going to do tonight is get an in-depth view of the market, S&P, NASDAQ, Dow, oil, silver, gold, and then basically a rundown of what I'm holding in my portfolio and my expectations for the next couple of months, really. So looking at the S&P, liked the fact that the Fed is planning to keep rates low for late 2014. We're really pressing up into this high volume area. It looks like we're gonna go test 1335 or so, 1325, 1335. That's when you really need to be on the lookout for selling pressure because you want to be able to ring the register with them. This market, it's getting chased higher, and there's really no other way to put it. If people aren't long this market, and they need to be long, they have no choice but to chase. NASDAQ new highs. This looks great. Any pullback? Don't you think people are going to want to be buyers? The answer is yes. The Dow close to new highs, right up on the value area for the last year, but it still looks good. Oil, we're consolidating, but we had a pretty nice reversal intraday in oil, and I'm going to bring up that chart really quick. What we have going on is basically like this is a common volume profile pattern where it's called a P, and which is you have basically low volume rally and then congestion for a period of time in a pretty defined range, and that's what we've seen with oil. So long as oil holds these recent lows, call it 97.50, oil's probably going to go test 101, which is the point of control for January. It's going to be interesting if we can get above that. Honestly, watch out. Oil's going higher from there. So just be aware of the fact that really, if we do clear 102 with some type of emphasis, the oil's going higher. I thought it was interesting. Silver's really performed nicely since gold and silver bottom. Today we had a nice pop. Really, I think if you're long silver, you stay long until around $34, which is another 3%, 2%, and look to reevaluate your position there. But silver looks great, and gold looks even better from my perspective. I really do think gold bottomed back at 1524, which was the point of control for the year. It has bounced. It held December's point of control. Now we are blasting off of January's point of control and the composite point of control over the last 90 days. So gold, it looks very good, and we broke this downtrend resistance line. I know I have a bunch of lines up here, but there's no reason why gold can't rally another 40 to 50 points. So stay long gold. This works. Copper, just to show it, performing well. No, I like gold better, but definitely performing well. Just looking at Freeport, because that's what you really want to be involved in. Hopefully you are. What we had formed was a little flag pattern, and from there we just saw a continuation to the upside. Remember, the 2-year point of control was right at $36. That's when we originally got long. You should be still involved in this name, looking for $50 or so on the upside. We blasted, our first target was 42, I believe it was 42, 43. We blasted through those levels, and we didn't even make a new low relative, after this thing got going. We didn't make a new low relative to this. What I'm looking at is this gap up higher. We didn't even get close to testing it, and the market just wanted to go higher. 2 days in a row, it closed on the lower than where it opened. But one of those days, it it opened, traded down, and then closed on its highs. So from there, we had consolidation and then a breakout to the upside. It wouldn't be appropriate if I don't talk about Apple. Apple, I think you just ignore, if you are long Apple, just ignore that you're long Apple and sell it at $500. This thing's going higher. It's going to take some time to consolidate. We are in white space now. If you were looking to do a trade on Apple, what you should have done was sell a call spread above where it opened, and that was the trade that I saw in Apple. Unfortunately, I did not take it. Walter Energy, hopefully you're long this name. I was talking about it back around $61 or so. I took profits on half of my position today, and it's because I my options doubled, and that's part of my discipline. Take risk off when your option prices double, and that's what I did. Looking at the intraday chart, point of control for January formed at the bottom end of the range. We traded through December's, and what did we do yesterday? We consolidated this morning, opened, tested the. Yesterday we opened, tested the point of control for December for the composite. The last 90 days have moved higher since. I had a 70 call. Those were the calls I chose. I actually have 75s too, but I took all of those off and just holding a small position of 70 calls. I don't want to see this thing come back much. I wanted to see it continue another $3 or $4, and that's when I'll be looking to take the entire position off. But Walter Energy still makes sense. Chesapeake Energy. I got long this back in the consolidation period down here. It was actually on this update thinking that was the bottom. Sure enough, it wasn't, but it was close. My theory was off the point of control for the last 2 years. What have we seen since? A huge day on Monday, up 6% or so, and just continuation. This thing's going higher, and I hope you're long this name. Looking for $26 or so on the upside, 25 to 26. There's really not much volume recently that should prove otherwise. Any type of resistance. So just be aware. Trail your stop if you are long. Hopefully you are, and enjoy the ride higher. American Express, this thing's breaking out. Just give it time, and keep your stop under the earnings low. That's not going to do it. The earnings low, which 48.80, call it 48.80. It's actually 48.84, but a stop under there will be sufficient. And expect a move higher. Realize that we are backing. We're in this congestion zone. But look at all the up days that you've had in the last 2 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9. Sorry, 8, and 1 down day. So realize that there is accumulation in American Express. When the market is open, people are buying American Express. Likewise, buying MasterCard. Be long this name. There's no reason not to be long this name, and expect a retest of the highs. 380, that would be my target for MasterCard. Las Vegas Sands, I've said multiple times that, you expect a test of 48, and because it's been right in the past to take profits there, you should do so, but that's not my thesis. My thesis is an all-out breakout from this range. I'm looking for $60, I'm looking for $70. I'm looking for Las Vegas Sands to make one of these runs that it had back in 2010. And the reason why is because it consolidated for a year and a half nearly. And it's about time that this thing makes a move. You should be in hopefully around $44, maybe a little less, hopefully a little less. And really just enjoy the ride. This thing will continue to work. Polaris, stay long, stay strong. This was one off the 1 year point of control. We were buying back in the 55 area, and we're getting paid to do so. Now we're up $10. A great trade, great volume today. this thing's going higher. Let it work for you. Don't overanalyze the situation. Let the stock go higher. CF Industries. I'll say it again. Let the stock go higher. It's going to $200. That's just where it's going to go. Expect the expected, which is a continuation of the current trend. Terra Nitrogen, still consolidating, but looks good. We are at the top end of the range, so watch it. What I'm doing is, let me fix that. Keeping a stop under this range. I believe it's about 184. I think my stop is. So, give it a little bit of room, but realize, you really don't want it to drop below these recent lows, and you want to see it continue to the upside. Walgreens started to accumulate more of this today. Had a small placeholder position, about a third of a position. Started to add to it. This thing's going higher. It's going to go test 37, which is good. It's finally. I've been waiting for this for a while. And I just want to see a follow through to the upside. Alright, this is interesting. Short, inverse, the 20-year TBT. I love the reversal that we got today. I've been holding some June calls on the TBT. The strike is 20, I believe, 20 or 21. I want to say 20 though. And really just looking for upside. I don't know how much upside, but some type of retracement. Maybe to the 200-day moving average. There's no volume here, so it's really hard to tell. But what I do like is the point of control is at 19 on TBT and price is above it. If I look at the 10-year, now this looks a little different. What I'm going to do is get rid of all these. The 10-year rallied today after the Fed's statement, but I think it's important to realize that if there's any weakness, the TBT looks like it's going higher, but this is counteracting that move. TLT looks like it's selling off. So just realize, now I was looking at the 10-year versus the 20-year ETF, but just realize that this looks good, and this looks like it has more potential upside, sort of like Alpha Natural Resource, which has been consolidating. This looks really poised, and I think you should be buyers of this. Expect a breakout to the upside. We were hoping for it back at the beginning of the year. Didn't get it. Got shaken out on this big downdraft, and now back in. Hopefully you're in back at the lows. I covered it on that day, so Alpha Natural Resource makes sense. And one that I haven't talked about a lot, CMI Cummins. Believe talked about this back in the lower end of the range, $90, maybe $92. Hopefully you have a position in this. To be honest, I have a small position. I wish I had a bigger position, but I don't. This continues higher. However, I did say your target should be 110 to 115 on the upside. We're close, so just realize there could be some selling pressure in Cummins, but overall, this market looks like it wants to go higher. This morning, in this morning's thoughts, I said 108's your line in the sand. You can see it was, not 108, 1308, and really we had a bounce range from 1310 to 1306. That was the big range. What did we do? We bounced off trendline resistance, trendline support, and we touched trendline resistance. So realize that this trend line continues, and eventually it's going to break down, but for now there's no reason to expect it to. Expect the expected, which is a continuation of this trend until it starts to break down. And if we really start to break down below 1306, call it 1300, then maybe you expect more downside down to 1275, maybe 1288, 1290, but this market's going to be accumulated on dips. Hopefully you've been following along to where you've been long this entire time since the October lows. But if not, that's fine, and it's important to realize what's going on in the market, and this is a market being accumulated, and enjoy it, because this is a really easy time to make money in the market right now. So have a good night, and I will talk to you tomorrow.